In a very competitive housing market, like just about anywhere in Southern Ontario these days, having a financing condition in your offer can cause it to not be considered seriously by sellers, especially if you're competing with other buyers, and so you have to take it out. But what are the possible consequences or repercussions of doing that? That is the topic of today's video. So real quick for context, in a less competitive market, you can usually make an offer that is conditional on financing. So once your offer is accepted, you take that agreement to the bank or to a broker and ensure that you can get the type of financing that you need to actually buy the property. Now, if you're already pre-approved as buyers, and you really should be, then that means that the lenders will agree to loan you a certain amount of money based on your personal circumstances. But there's a key part of the equation that's missing, and that would be the actual property itself and what you paid for it. To make a long story short, a lender has to agree with what you paid for a property since they're loaning you money to finance the vast majority of the transaction. And so part of the problem is that if you have an offer accepted that doesn't have a financing condition in it, you won't actually know whether a lender has agreed with what you've paid for a property or not until after you've come to a firm agreement of purchase and sale with a seller. And so the issue is, what if a lender doesn't agree with what you paid for a property? And I'll use an extreme example to illustrate a point. Let's say there's an outhouse for sale in Toronto, but it's on a great lot, and they're asking $650,000, and you think that's a great deal, and so you decide to pay that price. You've got $100,000 for a down payment, but you need to borrow the other $550,000 from a bank. So you take your agreement to the lender, and they decide that they're only going to give you a $500,000 loan because they think you overpaid by $50,000 because it's an outhouse. And so that means that you are responsible for that $50,000 difference. And it's almost as if you have to pretend that instead of needing a $100,000 down payment, you now need $150,000. And since you didn't have a financing condition in your offer, you are committed to completing the transaction with the seller, even though right now you don't have the money. A home not appraising or a short appraisal, which is what the set of circumstances is called, can be potential fallout from not having a financing condition in your offer. And so that's why it's really important to work with a qualified realtor who can demonstrate potential market value based on recent comparable sales in the neighborhood or the building. I'm Jamie Harnish, Toronto Real Estate Navigator with Bosley Real Estate. I want to thank you so much for your time. I appreciate you watching, and I hope to see you again. Take care.